Hello and welcome to this video edition from Nour Al-Hammoury in coordination with Orbex. We will be publishing weekly videos over the coming weeks to discuss the latest economic releases, insights, fundamental and technical analysis. Of course, the information in this video and the upcoming videos will be also for educational purposes only and not to be taken as an advice. Today we will start with the big event, which remains also the main driver of the market over the past few weeks, which is basically the U.S. elections. Since the victory of Donald Trump, we experienced a very wild move across all over the asset classes, from equities to bonds to currencies, oil and even metals. Yet there is still some confusion among many traders regarding the wild market reaction, which began with the massive drop in equities, the US dollar also, along with rising commodities such as gold, which added also more than $60 in a matter of a few minutes, and then everything flipped upside down and basically equities soared to record high. Gold lost more than 10% in a few days, while the dollar is now trading at the highest level in almost 13 years. Why this happened? There are many factors involved. First of all, a Donald Trump victory statement, which also came in as a shock to the market, as it was very balanced, and positive, unlike his previous statements, which used to be very strong, and sometimes it was scary to some people. The second factor is that his economic plan, and as he promised, is to increase the spending on infrastructure, which likely to have a positive impact on the U.S. economy, of course, but those are the main reasons behind the latest move. Donald Trump, of course, actually managed to restore the confidence in the market through his statement in a very short period of time. Does this mean that his plan is positive for the economy? We don't know yet until we start seeing the decisions that he will take in the first 100 days of his presidency, but some of it looks good, some of it also looks a little bit scary, such as renegotiating the trade agreement with China. However, we will keep you updated, keep you posted as much as we can through the reports and the videos on Orbex website. Going into the second part of this video, we will have a look at the upcoming economic releases for the week ahead, which is likely to have a notable impact on the market.
Monday is expected to be a very calm day throughout the three sessions. However, the most important event that traders most likely will be following is the ECB President Draghi, who's due to testify about the European Central Bank annual report before the European Parliament. And of course, as the head of the ECB, which controls the short-term interest rate, has more influence over the euro value than any other person. And this is why basically we believe that the traders will be following such testimony. But at the same time, this testimony might not have an enormous impact on the market, unless if the ECB President Draghi decided to hint for an extension of the QE, especially after the recent economic releases, and also after Donald Trump won the elections. In addition to that, also during the same day, but early in Asia, we will have the trade balance from Japan, in addition to the Canadian wholesale sales. But at the same time, we're not expecting that huge impact on the market. But on Tuesday, we're beginning with the Asian session on Tuesday, we have a significant impact on the market from New Zealand retail sales and trade balance. The estimates are quite mixed. The core retail sales is expected to rise by 1.1, while the retail sales is expected to rise by 0.8%. In addition to that, also we're looking for the Switzerland trade balance, which is set to show a surplus of 3.89 billion. But going to the European session today on Tuesday, the UK public sector will be released from the UK, in addition to Canada retail sales, and after also Friday's figures or inflation data, in addition also to the OPEC meeting. Don't forget to keep an eye on OPEC meeting for the next few weeks, as it will influence the Canadian dollar more than the economic figures that we'll be waiting from Canada. Going forward also to the US, we'll be waiting for two economic figures, which is the existing home sales and the Richmond Manufacturing Index. And the existing home sales is expected also to show some sort of a slowing down, but despite that, we believe that it might be a surprise to the upside. Richmond Manufacturing Index also is expected to rise again to 1 point. Going also to Wednesday. On Wednesday, first of all, it's a banking holiday in Japan. Therefore, we're not expecting that much big movement in Japanese yen pairs. But at the same time, we'll be waiting for and New Zealand PPI data, including the input and the output. But more importantly, we'll be waiting from during the the European session. We'll be waiting for the Euro area manufacturing and services PMI. But this is the flash manufacturing and flash services PMI, which is the first reading for the previous month. Therefore, there will be the biggest impact on the market during the European session. Going forward to the US, we'll be waiting for a bunch of data from the US, including durable goods, jobless claims, new home sales also. In addition to traders who likes to trade the oil, we'll be waiting for the US crude oil inventories. And the estimates actually is not available right for the time being, but usually it is available on Tuesday, but the estimates for the time being is expected to draw another 1 or 2 million barrels. Finally, which is the most important event for this week, is the FOMC meeting minutes, and we believe that this would have the most impact on the market during the week because the Federal Reserve might keep the door open for a rate hike in December, as also what Janet Yellen said in her testimony last week. Going forward also to Thursday. On Thursday, beginning with the Asian session, again, Japan flash manufacturing PMI is expected also to tick higher again to 51.7, up from 51.4. But the most important thing will be during the European session, as we'll be waiting for the German final GDP and the IFO business climate, and both are expected to show some decent figure, despite the fact that German final GDP is expected to remain stable at 0.2%. As for the US, it will be a banking holiday, therefore we're not expecting any huge impact on the market during that session. The final day of the week, which is a Friday, and beginning with the Asian session, New Zealand trade balance is expected to show a deficit of 950 million compared to 1.4 billion last month. But more importantly, we'll be waiting for Japan inflation data, including Tokyo core CPI and the national core CPI, and both are expected to decline by 0.4%, which would be also another drag on the Bank of Japan to increase the stimulus measures for the time being. The final and the most important data for the week will be on Friday from the UK during the European session. We'll be waiting for the second GDP estimate, which is expected also to show a growth of 0.5%, which is in line with the previous reading or the first reading. And finally, we'll be waiting for the Italian retail sales in Europe also, which is expected to show no growth in October. And finally, again, but not least, actually the US final services PMI, which is expected also to tick higher by 54.9, up from 54.9, in addition to the goods trade balance in the US. So that's basically the economical data that will be waiting during the week ahead, and you may need to take some notes ahead of your trading this week. And we will switch now to some technical analysis chart. As for technical analysis today, we will begin with the euro on the daily chart. As you may see, we had before an outlook on the euro for potential head and shoulder, which basically it's already there right now and it's already in progress, and we're just waiting for a few targets. So to explain a little bit about the euro, so if we just basically look at it at this way, so that would be the first shoulder, and then we had another dip lower all the way back to almost 107, and then from that level we topped out, or the peak was around like 115.90, and this is basically the top. And then all the way from there we dipped again for another low around the same area, 108.70s, 109.30, and then again the right shoulder. You can take it whether you want to take it as this is the right shoulder, or this is the right shoulder. But right now this is actually the right shoulder. And then you had the neckline, which basically was already broken many times. And also, if you want to take it from the far end, it is also possible. But at the end of the day, we had a break through that support, through that trend line, and then right now we are completing the head and shoulder pattern, which should basically test the 105.59 or 55, and if this basically breaks, so we might see another low all the way to 105.18. However, if we look at the technical indicators here, the stochastic, which is we're using the 933, and also the RSI, the 14 days of period 14 days, it looks very very oversold, which means that there is still a very high possibility that we can experience a bounce from the current levels all the way back up for at least for retracement before the downside continues, unless we experience another push higher for the dollar index, especially after last week or last week's breakout, especially in the dollar, or especially on the dollar index. So those are the two levels that I'll be watching in the next few days, or through the week ahead. So keep an eye on those two levels, because a break through those levels, we believe that we might be able to see another new low for the year. Looking to another currency, which is the Japanese yen, and this is the weekly chart that we're looking at. And there is something very interesting happened over the past week, which basically the index is already broken above a 200-week moving average. We've broken above also the 50-week moving average, with a huge bullish engulfing candle on the daily chart if we need to zoom in. At the same time, the technical indicators, especially the RSI and the stochastic is almost over, but we can say it's 88, but still there's some room for the RSI to advance further. If we put like the 50 level is still intact, and at the same time this is the first break above the 50 key level, or the 50 mid level, since almost November, at the beginning of November. So this is one of the November of 2015. So for the time being, there is still a possibility, especially after also breaking above this level, this body here, which is at 110 and 110.42, and the 110 was a very significant resistance area. So what we can see in the next few days or the next few weeks, there's a high possibility that we can test the 112.40, 112 also, which is the 112.53, which is the 50% chance from the long-term high of the yen back in May of 2015 all the way to this year's low. So right now there's a high possibility that we can test this level. However, at the end of we should mention here that again there is still a possibility of a retracement after that huge 2 weeks bull market. Going into also the British pound. The British pound is still actually still within a downtrend, and one of the most interesting charts that we've seen for the past weeks is also the sterling dollar. Why? Because once we saw that recovery here since August all the way up to September's high, and then we started declining, and then we saw that well-known flash crash. However, for the past few days, we had the 50-day moving average, which was tested only for a very short period of time, and since then we had a reversal candle, and then 1, 2, 3, 4, 5 days of declines, and here we had also a bear shooting star, which is basically also gives us more evidences for possible declines ahead. Also, if we put the 50 on the 50 mid levels on the RSI, it is still also pointing lower. It failed to break above that level for the past 3 weeks, actually since October until today. The RSI is still pointing lower, and also the stochastic is still pointing lower. The trend is already lower, and don't forget that this week we will be waiting for the UK or the UK Chancellor, who's going to present the budget for the House of Representatives, which set to have definitely a notable impact on the British pound. But for the time being, I'll be looking at one of the key levels for the time being is basically 122.87, and which is also, if we take out the Fibonacci to take the resistance. So the first support area basically stands for the time being at around 22.90, which was almost tested last week, but a break below that level will open the way toward also 21.70s is also possible. Going into some metals, which we're still having some long-term bullish outlook on it, but for back in May, we had a retracement all the way to 50%, and then well, actually it's not really 50% retracement, but we had a support area here and then another one here. It's almost the same levels, and then also here at 1204. This level was also tested on Friday, but without a clear break below that level. At the same time, the 50% retracement from November 2015 low all the way to this year's high, and then we had the 50% retracement so far. We had first the 38.2, and then now we have the 50. The negative indication, or the negative signal, is that the 50-day moving average is now crossing below the 200-day moving average, which is another bearish signal for gold. Yet, when the dollar index back in 2015, when it was 100, gold was below 1100, and we also reached like 1140 almost. But this time, the dollar index is above 100, but gold is still hovering above 1200. At the same time, the technical indicators are heavily oversold, which basically could be a sign for a bounce ahead. However, I'll be looking for those two levels, which is 1204 and 1272, as a potential buy around that level. Finally, the S&P 500, which was again at record high in the past few days, because again of the positive, as we said, the positive statements of Donald Trump. But don't forget that the Federal Reserve is expected to raise rates in the next few weeks, especially in December. But for the time being, there's a bearish divergence on the S&P. We tried to break above the 2186 here, and also the same level here and also here, but without any chance, which basically gives us some sort of a bearish outlook for the time being. But since the 50 moving average on the 1 hour chart is still intact, there's more room for the upside, unless if this is a triple top formation. By then we can see like if there will be a possibility for another decline. For the time being, I'll be looking at this level, around this level here, which is at 1280, and also we'll be looking at another level, which is at 78. A break through those levels would clear the way at least to 76. That's S&P 500, and also even toward 2173. So those are the technical charts that we'll be looking for the next days ahead. Thank you for watching this video. I know that this video has been a little bit long, but this is the start, and we'll make sure that the next videos will be shorter and more straight to the point. Thank you for watching, and thank you for watching Orbex channel and Orbex video, and I'll see you once again next week.